it became more clear at the beginning of the pandemic when we had all the PPP loans. There were so many people coming out and saying so many conflicting, wrong information that it really did take a handful of people to go deep dive, figure it out, and then help, others. So that's where this comes into. Now, before we talk a little bit about your firm, we've gone so much information. Are there any other important tax credits that you just want to at least mention for business owners to kind of keep on their radar? Maybe give us a little information about it. Because these things they could ask their accountant or they could reach out to you, and we'll give all that information. But tell us any other ones that we just need to like ping to our brain.
Yeah, I'll touch on a few just very quickly, which I don't always do very quickly. So we'll do the best we
We'll
can.
give it a try.
Yeah, exactly. Um, and the reason we talk about this right now is because you mentioned it too. With the pandemic, we're used to this stuff. I mean, we're used to PPP. We're used to employee retention credit. We're used to the idle loans, the restaurant revitalization grants, the shutter venue grants. All these things came out in the last 2 years, but there's other things that have existed and will continue to exist that make sense to be educated on, to learn about. And so, a couple of key ones that I specifically am passionate about. Really basic one is cost segregation. That's an incentive. It's not a credit, but it's anybody that owns a depreciable property, whether it's residential rental or commercial property. Normally, those are depreciated over like 39 years or 27 and a half years. And what cost seg does, it goes in and it breaks down those buildings into smaller components and see what portions you can accelerate and depreciate quicker. Okay. So rather than buying $1 million building and taking 1/39th of it every year, if I can find 400,000 of that has shorter lifespan, I can take that in 5, 7, 15 years instead of 39. So that's cost seg. It's pretty much anybody that owns a depreciable property.
Okay.
There's two other real estate incentives that are interesting. One's a credit and one's a deduction. The credit is 45L. That is for developers of residential property. So if you're developing residential, a real estate developer, you're developing residential property, and we could show that it's energy efficient. I won't go into the definition, but a lot of them will qualify. If it's energy efficient, a developer can get it up to $2,000 tax credit per unit they develop. So they built 100 homes last year and they all qualify. There's $100,000 tax credit. Again, reduction of income taxes. That's cash in their hand. Sure. 179D is a deduction for commercial property. So if I have a commercial building and I can show that's energy efficient, I can take a portion of that and write it off over 1 year rather than 39 years. So 179D is another real estate incentive. And then the last one we'll touch on, which is not, I was going to say similar to ERC, not really similar, but it's an employee credit again. It's based on wages. It's a new hire credit, which is interesting because there's a lot of new hiring going on right now. And you can get this credit if you hire an individual that either meets a certain demographic definition or geographic location. And if they meet that, there's anywhere from $2,400 to $9,600 credit per new hire. And so this is a pretty interesting area, especially with people being used to employment credits with ERC. Now there's this WOTC, work opportunity tax credit, that is out there, and that's something to look at as well. And those are really the key things that people should be aware of and thinking about going forward, because these exist. The lifespan of these haven't run out for the most part. Some of them need to be renewed right now, but they should all stick around for a while.
Well, and we have the great resignation or the great reshuffle that's going to eventually result in the great rehire.
Yes.
As everybody kind of, redefines what they want in life and things like that. And so I think there's going to be some opportunities in that capacity.